The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Okay, stock of the day is Nvidia. Yes, going off brief just slightly with this US stock because it's been a big one this week, hasn't it? Shares overnight recovered some of the recent losses after a bullish report from Bank of America Global Research reiterated Nvidia as their top sector pick. So the analyst there wrote in a client note that recent investor concerns about the pace of AI spending, delays in an upcoming chip, and regulation could be creating a buying opportunity. So they reiterated skepticism around AI capex and monetization being a fruitless endeavor until 2026, which was some of the narrative that was getting tossed around there. So I put it to my expert guests here with me in studio, Mark Moreland from Team Invest and Junbei Liu from Tribeca. Mark, I'm going to start with you because, correct me if I'm wrong, but you're an Nvidia shareholder.
I am.
Would you be topping up?
Yes, I have this week. So I bought some more. And Nvidia is really people have talked about bubbles. Is it a bubble? Is AI in a bubble? I think it's not. I think we're in the first innings of an AI boom, and there may be multiple bubbles in it within different sectors. And at the moment, if you look at the Microsofts and all the major or the FANG stocks, their commitments to buying Nvidia servers and so on virtually guarantee Nvidia to grow their earnings by a similar amount as they have for the last 2 years, which is 100% a year. And they're on a PE of 50 trailing, which is actually cheap. And we've never seen a company that's grown, of a major company that's been able to grow its earnings 100%, 100%. Never happened. I think Apple did too. 200% ones back in the smartphone days. But Jensen Huang, or Han, Wang, what'd you say it?
No, that's good. That's correct.
He's like, to me, he's like Steve Jobs. He's a genius CEO.
He's got a
strategically, he's brilliant, and they are so dominant. They're I've read some stats where they're saying they have 92% of the GPU market, and definitely the data center, but it's at least 80%. So they are the dominant player in the world in an absolute boom area. So I think it's going to be a massive success story over the next decade. However, the challenge with it is they don't have a lot of reoccurring revenue. They're basically a hardware seller, and they're capitalizing on this rebuild. Now, Jensen says there's over $1 trillion invested in in data centers, which will all get turned over the next 5 years, which is true. So there's plenty of growth still to come. But in the long term, unless they can build up their software business, which is CUDA and so on, and he wants to get it to 50% of their revenue within 2 or 3 years, if he can do that, then Nvidia will probably be a $10 trillion business within a decade. So I'm very, very bullish. But the hard thing for anyone, I think for analysts, is what do you put in for the out years as earnings? Because we are going through a massive boom in the product where at some point in time it's got to slow down. You can't keep growing at 100% a year. That's just a fact.
But for now, you're happy to buy the market leader. Yeah. Junbei, what do you think of Nvidia?
Look, just watching it from the sidelines, an Australian investor, I think, tactically it is a buy. I think talking about the AI trend, the demand for its product, it's not slowing down. However, for Nvidia, it is hardware producer. The reason its chip is so highly in demand is because nobody else could get there. Its biggest customers are buying so much, based on the demand. They are also investing a lot of money trying to bring their own chip to match the power of what Nvidia has. So now the question is, how quickly can they close the gap? I've been told, it's anywhere between 12 to 18 months, the gap will close. But it depends on what Nvidia, the next one, next to the GPU, which is being delayed, what that looks like. I think I've been told it's 2 to 5 times the power of what it is now. So maybe they can keep that lead. But, to me, it's that, your investment horizon becomes quite short for this business. Of course, they grow their software and the others. It will then offset some of those weakness in the future. As you know, share market investors always look forward to the next 12 months, right? So, if they can see your market share started losing, then that multiple becomes too big. It will have to come down. So I think, to me, it's tactically yes, because no one else can close that gap. They have to buy it, and they can put up their price. They can do all of that sort of things. And I think they can make a lot of money, and so they should. Just strategically over longer term, you probably want to go into every other area because there's software, there's data center, center. There's so many energy, utilities. There's so many areas you can make money from the AI. AI is here to stay. And because it's utility, it's breadth, there's so many ways to make money in that whole trend.
A little bit unfair, just to put you on the spot, but when you were thinking about the AI thematic, and I asked you, Nvidia, knowing you're an Australian investor, because we often lament the fact that there's not a lot of ways to gain exposure to that thematic here locally. How would you do that, Junbei?
So the obvious ones that we always talk about is data center directly. So you've got your Goodman Group, you've got your NextDC, but then the ones that's often not talked about is Infratel. So Infratel actually is, actually it's a New Zealand company. It's actually quite a large company, but they have a small free flow here in Australia, and they have invested in a lot of similar assets. The biggest one is the Canberra data center, and it actually has a lot of power to come online, and it's a little recognized because it sits in the fund. So Infratel is like the active investor, infrastructure investor. They go and find those assets and put them in funds. And over the last decade, they've done incredible track records, the management team. So whereas those assets hasn't been talked about, but now they started getting a bit more attention because AirTrunk was, gone for very high prices. And you are just seeing startup people getting interested in this space. But aside from that, we have so many businesses actually have exposure, placed somewhat in this. Prometheus is one that is, it's software. Obviously, it's imaging software used for imaging radiology department now going to cardiology. But their technology is actually being used by AI company in the medtech space to train their model to eventually come up with with AI tools that radiologists can use as maybe second opinion and or help them to overcome some of the data loss. So so there's quite a lot of company like that.
Yeah, good, exciting times. Junbei,
right.
Thank you. Mark, thank you. That is the stock of the day. Nvidia, it's a buy for both of my guests.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.